Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Friday, February 5th. Okay, this morning what I want to do is cover our usual topics, being the indexes and FATMAAN names. And I want to wrap up with a closer look at oil. We talked about yesterday the reflation trade and that oil had broken out. I want to dive into that a little bit closer today, maybe give you some trade ideas to think about heading into the weekend. And I don't have a specific trade in mind, but I think energy is set to perform here going forward, and I want to get at least some exposure to the segment. So. And there's a number of ways to do that, so I want to take a look at that. So as we wrap the week up here, let's just take a look and think about the dramatic shift. I mean, a week ago, right here, we're tagging the 50 EMA. We had dropped out of this nice channel that we had for, really since November. We had the VIX spike into 37. We had hedge funds degrossing. We had other hedge funds fighting for survival. We had government regulators calling Robinhood to insist on an infusion of capital to meet liquidity requirements. We had hedge funds fighting for survival, and Wall Street Bets was in control. Nobody was quite sure, what their next target was, what the fallout was going to be. Just all around chaos, right? Over the last couple of weeks. That all turns around Monday morning with a retest of this low right off the bat, and then off to the races. And over that period of time, the VIX has gone from 37 to 22. Hedge funds are right back in, adding leverage on the way back up. And we're at all-time highs. And all-time highs are bullish. So as we go through, and everything is green in the pre-market. I'm here at 10 minutes to 7 starting the video. So all-time highs across the board. SPY, QQQ, IWM. We talked about yesterday that we thought the cyclical reflation trade was going to do well. And we saw that yesterday in IWM. IWM was up 2%. SPY was up 1%, as was the Qs. And also, the Qs really struggled to get that 1%. The top names were kind of stuck in the mud, at least for the first half of the day, until they kind of gathered themselves and managed to make a little bit of progress forward. We'll take a look at the charts, but I think the value cyclical trade is in control at the moment. What I mean by that is in a leadership position. Even though their market cap is small, I think you're going to continue to see IWM outperform. Yesterday, we had an excellent trade setup on IWM that I hope you took. If you're listening yesterday and you're motivated and you were at your desk, we got a chance to get in right on the breakout, and that turned out to be a great trade. About it's up $5 now because IWM's trading 120 in the pre-market, but during the regular session we went from 115 to 118 and a half. So that was an impulsive breakout. So that's where we're at. Let's take a look at the charts. Like I said, not a lot of technical stuff to worry about here, because at all-time highs, anybody that's ever bought that still has shares are profitable. So whether you bought yesterday or 5 years ago, you are profitable right now on SPY. So today, if you're an active trader, continue to roll your stops higher, roll your strikes higher, and now the line to shoot against is 385. As long as 385 remains support and is not violated, things are bullish. We've recaptured the channel. The next target would be the midpoint of the channel up towards 388, and then the top of the channel, which would be, up in this mid 395, 397 area. And once it gets to that point, it might as well just hit 400, 4,000 on SPX, just to say that it did it, and then we can take it from there. But that's all predicated on the fact that price stays above 385. If it were to drop below, I would imagine a move back into this 383, 381 area. I don't think it's a place to go gonzo short. I would view any short bias activity to be strictly tactical. There are no sell signals. So don't be the guy out there trying to call the top like for the 80th time over the past several years. It's been a losing trade. I should know. I've tried that trade a few times, trying to get cute, looking at indicators, blah, 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 blah. Doesn't work, okay? It hasn't worked. Stay long. If you see a support breakdown somewhere and you want to try a short for, 6 hours or a day, knock yourself out. That can be a nice productive intraday trade. But as far as your duration trades, stay long. Look for long entries on stuff you want to, stay in, be in. Look for entry points on stocks that have gotten away from you, but that you like. Nothing goes to the sky. There'll be days when you get pullbacks in those names. Wait for your pullback, set your line in the sand as far as a stop, and then, give it a shot. Here's the 30-minute chart. Yesterday, we got to move right out of the gate, and along with a strong closing candle up above 385. I've got a little trend line here off of these lows of last Friday. You can use that as a gauge, but like I said, as long as things stay above 385, I don't see anything different to do than be long. Qs. We talked about this wobble yesterday. That turned out to be all it was a wobble. We did not come down even close to getting in this gap here below. So we popped right back up to the highs, and we're green in the pre-market. I think your line here is 330. You pop above today and hold that. Bulls are good to go. If for some reason they pop it above and then break back below 330, you could probably get a tactical short in here and look for 328 and then possibly a gap fill down below. But it's all predicated on, what happens at 330. I think the bulls are back in control. The Wall Street bet turbulence of last week is in the rearview mirror. That doesn't mean there aren't risks. There are. But with price above the channel and above, at all-time highs, you got to be thinking bullish, and you got to be thinking looking for more. Here you can see this was a great entry right here, guys. We had actually talked about this and flagged it yesterday. We had our our directional arrows keying off of this 326.50. We opened in the middle. Excuse me. We opened in the middle of the range. We did a quick reach up to 329. and then they brought it back, and then the next candle, they reached down for a tag of this prior low. This is last, what was that? Tuesday, something like that, the 3rd. Yeah, I think that was Tuesday. Came back to recheck these lows, which it did, and then it never looked back. So if you were keying off of support, sell at resistance, buy at support, you had a great entry there at 326.50, and then you had an easy trade the rest of the day with no red candles, no shakeout candles, no reason to look back, no reason to get out of your position unless you wanted to cover into the close to have nothing overnight. If you're still long from yesterday, stay long, and you can move everything up to 330 as we just discussed. IWM, awesome day yesterday for IWM, up over $4. Right here, we said get long against 215. Price actually gave us an opportunity to do that on the very first bar, and never looked back. So IWM's at all-time highs. Here was the open right at 215, which was the level that we said we wanted to get long against. Quick, impulsive move right up to 219, where it spent the rest of the day consolidating in this little flag structure. And now this morning, if memory serves me correctly, we're trading around 220. So I would be moving up your stops to 218. You don't want to roll out of this, right away, and I don't expect that to happen. But trend lines are there for a reason. You want to stay above that, keep extending your trend line as price goes up, and a break below becomes cautionary, and you certainly don't want to fall below 218, because that could open the door for a back test of 215. So be aware of that. I want to move quickly through the FATMAAN trade so we have a little bit of time on oil. Facebook didn't do anything yesterday. I had been keying off of, and we talked about 266 being a pivot point, and it remains a pivot point, but there doesn't seem to be a lot of energy behind the name at the moment, either to drive it lower or to buy it up. But 266 is definitely your pivot. We had some looks below, then they came up and just basically turned it into a nothing day. What was it? 16 cents. I mean, that's nothing. So if you're interested in Facebook, key off of 266. Your new levels, for getting going, are 270 and 263. That may be 263.50. I need to check that. Right here, below that, you're looking lower. Above 270, you're looking higher. Apple actually had a nice setup yesterday if you were motivated to take it and you were watching it. But let's talk about just from a standpoint of technical analysis and how you can run your trades and set your alarms during the day. We talked about the pre-market move because of Apple making the iCar, right? We wondered if they were going to fade it or buy it out of the gate. Well, they ended up fading it. And we talked about 135.50 as being the pivot. That below was bearish and above was bullish, and that there was a gap to fill down to 134. Well, they faded it below 135.5. They got it down as far as 134.50, and then they reversed it, right? So if you had gotten short at 135.50, you ended up being able to get $1 out of it. But the trade really didn't work because, once they reversed it and then brought it back up and recaptured 135.50, that was your buy trigger. So false breakdown below, recapture the pivot, that's your buy, and then it never looked back. And they ran it up to 137.50. So whether you had bought, or sold, bought puts, but, selling the stock, getting short right here is beside the fact. If you did, you got whipsawed or had to quickly reset and get back on the bull side. If you were of the mindset, hey, I'm just going to let that go and wait for a buy trigger, then you got that at 135.50. But that theme that keeps coming back in your active trading should be, recapturing levels from below are bullish and losing levels from above is bearish. Okay? Tesla. Doesn't look like much here, but, this is $20. The day before, price had lost this 855 area. They came down. They almost got to 830, but didn't, then reversed it and then went up the rest of the day. You would have had to have your levels a little bit more finely tuned than I have them here. But if you look on the shorter time frames, you will see a base forming here and then a chance for a reversal. So for today, I continue to think 855 is the key. If price recaptures 855, I would be a buyer there looking for 880. If for some reason they reject it there, I think you're still coming back to 830. That would be the favored game plan for Tesla. Disappointed in Microsoft. Had the fake breakout on Wednesday. Yesterday it dropped back down below 243. That stopped me out of my long. Came down here, found some support midday and came back up. I'll have to decide what I want to do on Microsoft. I'm still a Microsoft bull. Nice uptrend. One of the few that didn't sell off after earnings. The trade is to get long again on the breakout of 243 and then hope it just drives higher from there. It should. I think it's set up to do that. But obviously got whipsawed yesterday. Yesterday on the false breakout from Wednesday. So right here got me out and then stabilized, and I think it'll eventually break out. And if it does, I think it's going to 250. If I put this channel line on here, that's well within the upper line of the channel, so I think it can find 250 on a breakout. Amazon, very much the same setup as Apple, and that's really all I want to comment on really this morning. We had talked about 3,300 being the pivot. Early in the day, it lost 3,300. Gave a pretty good look down below, $20. The bears probably thought they were on their way on a breakdown because early in the morning yesterday, the Qs were really soft and, threatening to break down. But then you got a big hammer candle that came up and closed right on 3,300. And when you see the look below that fails and then gets bought up right back up to your level, that should be a buying trigger for you. Even if you didn't buy that candle, the next candle reclaimed 3,300 for sure. That was your buy alarm. And then you got 15 or 20 bucks out of it, which is not a lot on Amazon. But just from a trading point of view, I just wanted to point out that, the look below and fail plus the recapture of the level from below, those are buying signals. And then what price does after that is out of our control. You just have to hope that it runs. Google had a weak day, dropped down below its box, but quickly stabilized here. So no breakdown. I think it's still in bull mode. How long it spends in here consolidating is anybody's guess, but I think it goes higher. You could set your alarm at yesterday's low in here around 2:30 or wherever it is on a smaller time frame chart. Set your alarm, and if things fall apart and price moves into the gap that's substantial, that's $100. You can try a short there. Netflix, soggy, but then there was some news coming out that they were raising prices in Japan by 15% or something. I don't know what it was, but that was the reason for this big candle. Now you can use this 552.50 as your pivot. If you can hold above, you can look for 570 and then 600. If it can't hold it, then you've got this trend line as support. There was a lot of institutional buying yesterday. A lot of it directed at today, but also into next week and the week beyond, looking for a run back up to 590, 600, something like that. So let's take a quick look at oil. We talked about oil breaking out. Here's the breakout. We had, a run off the November low with the vaccine news, running up here, consolidating between 52 and 53, and then this week we've had the breakout, and oil's up again today. So oil's on the move. Here's a weekly chart that bears even more significance. Here we've got downtrend resistance. Here we've got the large volume over price bar, which is resistance while price is below and support while prices are above. So price has taken that out. So now 52, that zone between 50 and 52 should be very solid support. And if that were to ever fail, then we got a false breakout scenario and looking for a fast move back down towards 42. But as it stands now, you got to assume it holds. And, why can't price go to 62? Why can't it go to 75, right? I jotted down some notes here. The bull case for oil. COVID, I think, is on the decline. There are risks out there, but the 7-day moving average of hospitalizations and deaths are rolling over, and more vaccines are being put in arms. That's going to be helpful. I think demand, while I don't think it's going to spike, I think it will be on the rise for the balance of 21. 2020 was definitely a shock to the system as far as producers go. Very little capex last year. I was looking at rig counts. Last year at this time, there were 650 active rigs. This year, less than half. The last data point I saw was 285. So couple that with, if you know anything about fracking wells, whenever they frack a new well, they get great flows for a short period of time, and then the decline rate increases as the pressure goes down, the flows go down, and then the well becomes less productive. Now, it still makes money, and that's why they continue to do it. All I'm saying is the wells that were drilled and completed early in 2020 are now in decline a year later. And for the most part, those wells have not been replaced in 2020. So we're at a deficiency of new supply. And I think you're going to see that persist into 21. The Biden administration has already signed executive order for no drilling on federal lands. I think you can be pretty much assured that new permits are going to be harder to come by. It's not going to be a rubber stamp. They're going to, you better go back and do a more thorough environmental study. You got to do this, you got to do that. I think these companies will eventually get their permits, but it's not going to be a walk in the park like it has the last 4 or 5 years. I think it'll be a little bit tougher. I think Saudi and the rest of OPEC have some supply discipline to keep prices up. They're not going to just open the spigots and, cave prices in. They want to see those higher prices. And I think now, unlike 2015, where all these producers just went to private equity and all these places to get the free money to regenerate and restart their operations after a mini flash crash, that money's not going to be there now because of ESG. And I think it's going to be harder for these oil and gas operators to find cheap money with people that are willing to let them use it. So, because then if if it's discovered that you're not green, right? That you're not green, that you've got an investment in dirty oil, then that could taint your fund. So I think it's going to be tougher for companies to get those investment dollars. So I think there's a little dynamic going on here that is bullish for oil on a lot of fronts. Let's run through some names. Here's oil servicer, Helmerich and Payne. Big bull flag. Impulsive move off the floor. Consolidating for 2 months. I'd be alarming 27.50. Big price void up here. Measured move up into the mid 40s. I think that'll be a nice trade if and when it ever develops. You could also alarm the 50 down here at 23, 24. And if you saw a little weakness that brought price back down into the bottom of the box, that would be an even better place to get long. And then if you get a move back up to the top of the box, you'd already be $3, $4 to the good. And then if you got the breakout, you could roll everything higher, take your profit on the first leg, and then set your new stop and your new strikes in this 27, 27 and a half, 28 range. And then you'll be all set for a move back up towards $40. Schlumberger weekly, testing this downtrend resistance. I think on a breakout, you've got a relatively fast move up to 32. And then if it can pop 32, you got, a lot of room above. And, if you weren't all convinced of this thesis, what you could do is say, okay, I'm not going to worry about this I'm not going to worry about this $6 here. I'm just going to wait for this to break out above 32, and then I'll get long and see if it can go back up to $65 where it was 3 years ago. That's fine. I'm just showing these charts as ideas, and I have by no means looked at every chart in the sector, but if you're going to drill new wells, you're going to have to use, Halliburton or Schlumberger or HP. You're going to need an oil servicer to help you. So I'm just showing you these names. Here's Halliburton, right here at the high volume over price bar resistance. You could put an alarm right in here at 1920, depending on when you want to try and get in. And I think your first move is up to 30 here. So that would be, a nice $10 move. EOG Resources, weekly chart, right at downtrend resistance. I think if you pop 60, you got 70 in the bag for a test of this line. And then if it can clear 70, you're looking at 80. So quality operator, good finances, not overburdened with debt. I think EOG is the cream is gonna rise to the top. LNG is another one that's looking good. Back into this trading range between 58 and 70. I think you can alarm both the high and the low of this trading range. If you got a pull in to 58, 59, I'd be a buyer there and then look for 70 at the top of the box. If you don't get that, alarm 70, and on a breakout, the measured move target will be 82, right? $12 box, breakout above 70, target's 82.50. I think that would be a good trade to take. Pioneer Resources, another quality name, right up there with EOG. Long-standing downtrend resistance has been taken out. Had the breakout above 115, 117.50. Breakout, couple weeks above. Back test complete. Now bouncing out. I think you can take this right now against 117.50 and camp out. Your first target, 150. Second target, up near 170. Quality name, good financials, good backing, relatively speaking, low debt, and I think that's a name that you should consider. Here's Marathon. MPC weekly has just broken back up into this trading range from 42.5. I think this is going to find 62.5 over time. If you were motivated on this one, here was your breakout and your back test last week. Now price is up this week. If you can stomach $5 of risk, there's still $15 of upside in the trade from 47.50 to 63. $15, so that's 3 to 1. And that kind of meets the baseline criteria for taking a trade. You at least want to look for 3 to 1. And if you wanted to take a cheap, out of the money shot, you could do something like some 52.50 calls or a 52.50, 62.50 spread, and look for that to fill in the weeks and months ahead. You'd have to check those prices to make sure it made sense, but you could certainly play it that way if you didn't want to, get anything real close to in the money. So that's all I have for today. Let's do a quick recap. All-time highs are bullish. Don't be the guy trying to call the top and shorting it. It's not going to work. You're going to lose a lot of money. So recalibrate everything. You've got clear lines to shoot against. You've got, what do we got? 385 on SPY. We've got 330 on the Qs. We've got 215 on IWM. I'm still looking for the reflation trade to continue working. Higher interest rates, banks, energy, basic materials, value, industrials, travel, hotels, that kind of stuff. As COVID rolls down and improves and the economy reopens, I think the cyclical trade will do well. Whether it outperforms or not, I can't tell you. I think it will, but I think it'll do more than hold its own. Moving into FANG, doesn't seem to be a lot of energy in the space at the moment, with a lot of the names selling off after earnings and, having trouble finding its footing and moving back into a leadership spot. That doesn't mean you can't trade it. If you've been trading them for a while, you know the levels really well. You can put on some nice intraday trades here and there to supplement your position trades. Or you can look for more fertile fields elsewhere on more active names. Oil. I think there's a bullish backdrop on increased demand with either stable or tightening supply. I think that's a bullish backdrop for all the reasons that I stated. I think it would be a good thing to get some oil exposure. You can go the easy way, which doesn't mean bad, with XOP or XES ETFs that cover the space. If you don't want to hunt for individual names, if you want to play oil directly, your vehicle is USO if you're not going to get into the futures market. But if you get into the E&P names, I would look for quality. I don't think it's necessary to go up to Chevron and Exxon, because I think you're going to lose a lot of horsepower if you get that big. But some good mid-market majors, I guess is what they call them. The EOG, the Pioneers, the Servicers, Halliburton, Schlumberger, HP, FANG is a nice operator in the space. I think there's the potential of some of these guys, well capitalized, the ones that have access to markets, potentially buying out some of the littler players as they struggle to get access to capital to refire. But we'll just have to see. This is strictly a play on oil prices rising. Another name is Continental Resources, CLR. They're a fairly big mid-market major kind of a name. But be careful about, getting the bottom of the barrel. Not saying it can't work. It can. But I would be inclined to go for quality. And I will tell you, there's one fly in the ointment in the whole thing. And this goes for the equity market too. And that's the rising dollar. If you look back and you put some charts together, a rising dollar has been a risk-off trade for equities, commodities, and oil. Right? If you remember, and it wasn't that long ago, there were days when there was dollar strength. It almost automatically meant red day for equities. We have not seen that this week. We have seen the dollar rising along with rising oil, rising commodities, rising equities. And something's fake. I don't know what it is. That divergence can persist for a long time, but I think that's the risk to this market right here, right now, is that divergence between the rising dollar and rising equities and rising commodities. Now, one place where that relationship has held is with gold. Rising dollar is a headwind to gold, and we've seen that this week with a substantial sell-off in GLD and gold. So there, the historical relationship has held, but in equities and other commodities, it hasn't. So be aware of that. Stay on your toes. All-time highs don't mean complacency and go back to sleep. As we saw last week, we can come back and visit the 50 in a heartbeat, the 50 EMA. That risk is always out there. As your stocks and your positions go higher, roll and protect, roll and protect, roll and protect. Do not sit out there with massive embedded gains in your option positions, because 2 bad days in a row, you will feel that in your account. So keep rolling up, keep taking money to the bank, stay long, and I think you're gonna do really, really well. I sent out the position update yesterday. If you're in those names, we're heading to February OPEX in 2 weeks. I would be looking to reposition most of that stuff further out in time. Doesn't have to be done today. Those things will really add a lot of value if the market stays strong into February OPEX, and it looks like it will at this point. So be judicious about what you let run and what stuff you want to roll. You could even roll higher within the February options chain if you like. If you were at a 30 strike and the stock was already at 35, $5 in the money, you can roll that up into a February 35. Just go back up to at the money and then look for 40 over the next 2 weeks. That way you'll have money in the bank, but you're still going to be long with an inexpensive option. Okay, let's wrap it up here. Long video, but hopefully you got something out of it. If you're new in the channel and like what you've heard, got some good trade ideas, found some levels, got some ideas on how to manage trades, hit the subscribe button and the alarm bell. You'll get all my content. And then over in the show notes, look at the links that I have to the blog site and to register for all my content, where you'll get an invite link to our trading room. We'd love to have you there. So for the rest of you, thanks for your continued support and for taking the time this morning to listen. I hope it's helping you put on better trades and make more money than otherwise. So I really appreciate it. Have a good day of trading. And if I don't talk to you the rest of today, have a great weekend, and let's tackle it next week. So until we speak again, this has been Chris Buss with Traders Profit Compass. Talk to you soon.